In today's episode, we have Torbjørn Jenssen with us, all the way from Norway. Welcome to the show, Torbjørn.
Thank you, and thank you for having me.
How are you doing these days? Norway is pretty screwed up these days, I've heard.
Well, no, it's not too screwed up, but it's pretty shut down. So I'm doing fine. I'm at good health, but spending the full day with my wife and our daughter, that's 1.5 years, on 50 square meters is it's kind of stressful, but it's also nice. We're making it work.
I can imagine. We are everyone experiencing this turbulent time. So yeah, that's how it is these days. I guess we just have to cope with the situation.
Yeah, and it's probably not going to pass very soon either, looking at the statistics, unfortunately.
Probably not. So before we get into this episode where we're going to talk about the macro environment, can you please give us a short introduction about who is Torbjørn and what is cryptographen and arcane assets?
Yeah, so I'm an economist who discovered Bitcoin back in 2012, actually, while I was studying at the University of London, SOAS. And at the time, I had a very keen interest in the question of what is money. And a friend of mine told me about this strange thing called Bitcoin. Of course, I initially dismissed it. I didn't believe in free lunches, and I thought this was probably a scam or something. But it really caught my interest, so I started looking deeper into Bitcoin and realized that this was super interesting. Did my master thesis on Bitcoin in 2013, 2014. At the time, I felt I was awfully late to the party. I felt the development was going on so fast. There was no way for me to stay up to speed. But in reality, there's been so many detours, be it different altcoins or blockchain, not crypto, that's made it easier to actually stay relevant. And also the fact that I discovered it at a time where there wasn't too much popular writings about it forced me to dig deeper and actually learn a lot of the technical aspects from a more fundamental level, which has been very helpful to understand it better and kind of have being able to differentiate between what's really interesting and what's not, what's only hype. In Norway, I kind of have become this go-to guy, all things crypto. So if the media is wondering what's happening to the price, they're calling me. During the hype of 2016 and 17, people tend to forget that there was a hype in 16 as well, and everything was looking very bullish. Companies, government bodies, be it central bank or the Ministry of Finance, kind of contacted me to do consulting, to do presentations when they wanted to know about crypto. So at the time I was working as a consultant, and I thought maybe I'll kind of do more and more of this Bitcoin crypto blockchain thing as a consultant. But then in the spring of 2018, I was approached by two Norwegian investors who had been looking at the crypto market for a long time, who saw that it was a lot of smart people developing very interesting things in crypto. They discovered Bitcoin and crypto primarily in the autumn of 2017 and realized that the market was there was too much euphoria, too much hype, so they waited until the spring of 2018 when the prices had collapsed. And that's when they decided now is the time to start building presence in this sector. So after several meetings with them, we decided together to start what is now called Arcane Crypto, which is the company in which I'm the CEO. And Cryptographen is one of our 6 business units under Arcane Crypto, a news site for content and research related to the crypto markets.
All right, I was listening to some episodes of Cryptographen and it seems to be high quality. So thank you for that.
It's a podcast as well. So it's podcast, a news site, and yeah.
Yeah, and it's both in English and in Norwegian, right? The news site.
The news site is both in English and Norwegian. It's not fully mirrored. We try to tailor cases depending on the relevance for an international audience and a domestic audience.
So with that introduction and the background from Torbjørn, let's head into today's episode's main topic, the macro environment. And it might be very obvious why we are crashing so hard, but what's your take on why markets are falling these days?
So financial markets in general, I think it's very important to realize that after the financial crisis, there's been a lot of debt being built up, a lot of fragility being built up in the financial system. So you can think of it, if there's no wind, it's very easy to build a house of cards. And that's what's happened. It's been very stable in the aftermath of the financial crisis. So a lot of the financial structures that have been built up have been very fragile. Then the current downturn we're seeing is of course triggered by the shock of the coronavirus, where we see a massive hit to demand, basically. It's demand shock where people stop buying what they used to buy. The obvious thing being airline tickets, but also they stop going to bars, they stop going to the movies, and hits a lot of industries. And then companies have to lay people off, which means that they have less income. And all of this translates into financial problems for companies that have very low cash holdings that have been dependent on continuously borrowing more money and have been staying afloat on very limited capital base or cash base. And that's scaring, of course, to the financial markets, because they realize that if these companies stop earning money for a month or two, they're not able to pay back on the debt, and they will not be able to raise more debt. Trying to counter this, central banks and governments have started a lot of stimulus packages, both decreasing interest rates where they haven't already been zero, and in Norway, for instance, announced different saving packages for different industries. But the main problem is that since this is a demand shock, sharp reduction in demand, there's not much you can do through monetary stimulus. So back in the financial crisis, it was exactly that, a financial crisis. Then the tools available to especially central banks, but also government, was very effective, because you could reinflate assets, and you could kind of keep the system afloat and reinstall trust in counterpart in the financial system between banks. But right now, what they're having to make up for is the shortfall in demand, and there's no real good way to do that. That's why we've seen the markets continuing falling even after announced stimulus packages.
So if central banks and governments can't really do anything, what will happen then? Are we helpless, or is there anything we can do?
So they can do something. They can ease the pain a little bit, so helpless is not exactly correct, but it looks pretty grim, unless we get a medicine or vaccine against corona relatively soon.
Okay, and this downfall that was built up on a house of cards, as you mentioned, would that be the same if we had built up our monetary system in another way, you think?
It's very hard to... So a lot of people in crypto, and especially in Bitcoin, want to tell you this story that if we only had used hard money, none of this fragility would have occurred in the first place. I don't believe that, because a lot of the fragility is inherently being built up in any stable period. It's an economist who has a very profound insight, who's called Hyman Minsky, who stated that stability is destabilizing. So even with a different monetary system, we would have had periods of stability. And in those periods of stability, people and companies enter into more and more fragile investments, credit relationships, because it all looks safe, because it's been stable. And that builds up the inherent instability. So I think that we could have had a fragile system as well, with a different monetary system.
Okay, so because this is not a financial problem, so to say, it's more like the demand is shrinking. There is actually nothing central banks or governments can do, but
so that's the trigger, and then it's amplified by the fragility in the economy, where there's been too much leverage. There's no doubt about that, and so I'm not saying it wouldn't be different. I'm just warning against jumping to a conclusion where it's all the fault of a monetary system where you have central banks.
All right. So if we're trying to move a bit forward, you were mentioning hard money there. Can you please explain what hard money is compared to soft money, if you so to say?
So the idea behind hard money is a non-inflationary money, a money stock that is either constant or growing at a very slow pace. Historically, that has been gold with a 2% inflation. Here it's very important to stress that the inflation people talk about when they talk about the inflation rate of new bitcoins or gold, they talk about the quantity of money. But when you talk about inflation in society, you typically talk about the increase in prices. So that's two very different concepts. So a lot of people are saying that the reason why we have so much debt these days is because interest rates have been artificially pushed down by central banks to kind of try to keep the economic activity high and through active politics. Had we been on a gold standard or a Bitcoin standard, that presumably wouldn't have been possible because central banks cannot produce more gold or cannot produce more Bitcoin.
Are you one of those proponents saying that as well?
So where I kind of differentiate myself is I'm not saying that it's necessarily better, but I'm saying that when people and companies are free to choose their money, they will tend to choose something that serves their interest. And as long as the monetary inflation in terms of price increase has been relatively low, for instance, in a country in Norway, the efficiency of using the Norwegian kroner has been high enough that people have continued using that instead of jumping to alternatives. But in periods of crisis, for instance, right now, the Norwegian kroner has been collapsing. And if that continues, it's natural for both the private sector and households to look to other forms of money. And then non-inflationary monies will keep its value better. And that will be something people will demand, and kind of you'll see a flow towards harder money in times of turmoil.
All right. And what we've seen recently, for example, with harder money such as Bitcoin especially, is that it has been kind of correlated with the market. It's been kind of dumping even harder than the market at some days as well.
Yes and no. So, of course, when we talk about Bitcoin, it's really important to realize how tiny an asset it is. So to us normal people, when we look at the market cap of Bitcoin, it looks huge. But if you compare that to kind of big asset classes, it's tiny. So it's still very young. And you're right that there's been a period recently where Bitcoin has had a very high correlation with the stock market. But over the last few days, you've seen a decoupling where Bitcoin started to live its own life again, not linked to the stock market movement. And the short period where Bitcoin fell together with the stock market is actually not too surprising. One have to remember that we've gotten more and more institutional traders coming into Bitcoin. Traders operating in both Bitcoin market and in traditional markets. And when the asset prices fall sharply and they've been using leverage, they get margin calls. They need cash to cover their position and they'll sell Bitcoin. So that put a downward pressure on Bitcoin. On top of that, there's been two distinct episodes of whales dumping Bitcoin without having any direct link to either the general development in the asset market or in relation to Corona. One being 1,300 Bitcoins being dumped from the Plus token Ponzi scheme. The other being around 1,000 Bitcoins being dumped from a miner who hadn't found his password for coins he had mined back in 2010, and then suddenly found it and was 1,000 Bitcoin that was dumped on the market. And first of all, when these large Bitcoin sales are done fast, it'll push the market downwards. And especially in a situation where market makers have been pulling out due to the general instability in financial markets generally. So you have traders like Jump Trade and others being active both in traditional markets and in Bitcoin. They had reduced the liquidity they provided in Bitcoin. And then these dumps set off a liquidation feedback loop in the Bitcoin market. In Bitcoin, it's been extremely easy to give normal people leverage up to 100x on platforms like Deribit and BitMEX. The reason being that Bitcoin is a great collateral. It's traded 24/7, and as long as you send the Bitcoins to the exchange and it's physically there, they know that they can liquidate it, so they can give up to 100x leverage to anybody. So there was a lot of leverage in the Bitcoin market, and then when the price suddenly dropped, people either hit their stop loss or were liquidated, resulting in their position being sold, pushing prices further down, resulting in other people hitting their stop loss or being liquidated, resulting in them being sold. And then you had a feedback mechanism, a financial crisis, if you like, in the Bitcoin market. The only thing was that it took a day or two and then it was kind of all wiped out.
All right. So there were basically just two whales kind of driving down the market and initiating this feedback loop to push prices back to 4,000.
So it's one, institutional traders selling Bitcoin, market makers pulling out liquidity and trying to get cash in other markets. Two whales dumping in this market, setting off a feedback mechanism in the derivatives market. And that's more or less about it for Bitcoin and the recent fall. And it's very interesting to notice how since end of last week, Bitcoin's been moving very independently of the stock market.
All right. So why do you think these whales really want to dump their Bitcoin if it's going to be this kind of hard money, futuristic, basically money in the future? Why would the whales want to dump their money now?
So they might not believe that's the case. Or if you take the Plus token, which has raised these funds through a scam, for them to be able to get out of their Bitcoin and into other assets is a way to launder the money. If they're only keeping the same Bitcoin, over time it'll be easier and easier to track it, potentially through coin joins as well. So for them, it might make sense to sell it. The other thing is that they might want to spend the money now. They might want to buy a yacht now or spend it now, and it's not too many places you can spend Bitcoin today. Okay. And that might be the case for this miner who finally found the password to his coins, that he didn't necessarily have a strong view of whether Bitcoin should go up or down, and just wanted the money for some reason.
All right. So basically, there are different kinds of reasons that this might have happened. But you were touching upon it in your introduction, talking about blockchain, not Bitcoin. And there are so many people out there being skeptical about Bitcoin, but very bullish on blockchain itself. Why is Bitcoin the only obvious like cryptocurrency out there? And what if I or someone else trying to create Bitcoin 2.0 or another cryptocurrency that is better than Bitcoin?
Yeah, so a lot of people think that Bitcoin and blockchain is primarily technology, but it's not. It's primarily a social institution, a social agreement, coordination. So it's all about network effects. For Bitcoin trying to become a form of digital money, liquidity is extremely important. And Bitcoin alone has more liquidity than all of the rest of the crypto market. Every crypto exchange will let you trade Bitcoin. Some of them will also let you trade some other coins, but you don't find an exchange trading only some other coins. So Bitcoin has an extremely powerful head start when it comes to liquidity comes to acceptance, we in the crypto community can list 10, 15, 20, 100 different coins and projects. But to the normal person, it's Bitcoin and altcoin. And the brand value of Bitcoin should not be underestimated. Newbies coming into this will naturally have a tendency to go to Bitcoin. In addition to Bitcoin being by far the most liquid, having by far the broadest infrastructure in terms of exchange infrastructure all over the world, it's also the project that's been tested the most. It's been running the longest. It's been handling the largest amount of value without being hacked, without going down. And you can never write a proof on a piece of paper regarding how secure a blockchain, or especially not a public blockchain, is or isn't. You can analyze subparts of the system, but when it comes to the system as a whole, the only thing you can do is to look at how long has it lived, how much value has it processed without being hacked, and that gives you a feeling of how robust it is. And there, Bitcoin has been through way tougher times than any other project. So it's more likely to be surviving in the future. It's something called the Lindy effect, where the expected rest lifetime is proportional to the lifetime already lived, which means that for every day Bitcoin continues living, you would expect it to live for even longer. And Bitcoin has lived the longest.
It has. But then on the other hand, you have other projects hard forking from Bitcoin, such as Bitcoin Cash and Bitcoin SV, and they are themselves referring back to them being the original Bitcoin, like saying, yeah, we have the original history back to 2009, for example, like Roger Ver and Big Falking and those guys.
Yeah, so but it's not about actually having the original history as a part of your blockchain. That could any project get, as you're mentioning. It's about keeping the network effect of being the coin recognized by exchanges, being the coin recognized by the community. And the community around Bitcoin is way larger than that of Bitcoin Cash and Bitcoin SV, which means that you have more developers working on improving the Bitcoin code, building on top of it, building services for it, new wallets for it, than you have for these other projects. So, and of course, you could argue that larger blocks will lead to more centralization and then remove the whole point. But even before going down that line of argument, it's about the gravitation effect. And what is today called Bitcoin has by far the most gravitational, the most mass, and will continue to attract both money, community, infrastructure, and use around it.
Right, interesting. That reasoning, if you would argue against an Ethereum proponent, then that person would probably say that is not true, because Ethereum has by far the most developers developing projects on top of their blockchain. What's your take on that?
So one thing is that it's of course very difficult to count developers in open source projects, especially when there's more repositories, and also you can have projects not a part of the core implementations. I find personally Ethereum super interesting as an experimental platform, but one has to bear in mind that with an extremely ambitious roadmap of hard forking all the time, and extremely ambitious goals in terms of functionality one want to see in the base layer of the protocol stack. It's, from my understanding, not something you would trust to become hard money, something that you would feel comfortable about from a monetary perspective 10 years from now. That's not to dismiss Ethereum and say that you shouldn't work on Ethereum. It's more that it's two very, very different niches that are being attacked by Bitcoin and Ethereum, I think.
Right. So in your mind and your future outlook, is it Bitcoin, BTC, that has the brightest future to kind of overtake US dollar as the world reserve currency, or where do you see Bitcoin is going from where we are today?
Yeah, so I think before becoming a reserve currency in the sense of a unit of account, it's already, so it's become a store of value or an asset in which people invest because they think it will appreciate. Now you're starting to see it become a medium of exchange as well, partly due to Lightning, but primarily due to better infrastructure, pushing down the cost of going from normal currency into Bitcoin and out into fiat currency again. So in Arcane, for instance, we are building services targeting an audience who want to do fiat transfers, but where we can jump into Bitcoin as a payment rail and then out again. That's being enabled by both Lightning, as I said, but also the fact that you now can trade in and out for sub-basis point cost. Bitcoin has some extremely unique and interesting properties in that it's a physical object that is purely digital. It's a digital bearer instrument without any counterparty risk, which makes it extremely valuable as a collateral asset, as I mentioned, because if you send it somewhere else, the value is actually there. You cannot rehypothecate it. It's sitting there, and you can comfortably give someone credit against Bitcoin as collateral, because if the Bitcoin is with you, there's no way the same individual can have posted it as collateral to something else. So I think we'll see a role of Bitcoin as a payment rail and a collateral asset growing over the next 3, 4, 5 years. I think as a reserve currency and unit of account, it's very hard to know when that will become, when that will happen. I think we're moving in that direction, but the market needs to mature a lot and become a way bigger, I think 100x before we fully get there. But right now it looks like we're on that path. And the reason being that no country wants to trust another country for its monetary freedom. So for international payments, we have historically typically used gold because that way you don't have to trust another country if you hold the gold reserves. If you hold US dollars and you're Russia, you have to trust the US. But when Nixon left the gold standard unilaterally in '71 because he didn't want to pay the debt back to France, we have to remember that all of the payment systems in the world, all of the financial systems in the world have been built around the US dollar as the final means of settlement. And all of that infrastructure created a lock-in effect where the world couldn't suddenly jump to something else. They couldn't suddenly jump to special drawing rights, a basket created by the IMF, similar to kind of the thinking around Libra's basket today. And you couldn't jump to physical gold because it's too costly to ship around, and was the reason why you ended up using paper dollars in the first place. Now we're getting a completely new infrastructure disrupting the lock-in effect of the US dollar as the final means of settlement. And that's going to be extremely transformational. Now you can have transactions between 2 sub-Saharan African countries where you buy Bitcoin in one, send it to the other one, and sell it in the next market. So you don't have to go from Kenya all the way up to the US and then all the way down again to Uganda, which is how the payment stream is typically done today if you go south-south.
All right, so very interesting reasoning there. I like how you are kind of explaining the monetarization process of how Bitcoin, for example, as you're working, you're using Bitcoin as a payment rail, and how
I think that's the next step. Yes, the first one being a speculative asset, an investment class, and on the back of that, there's been built out a lot of infrastructure for exchanging. With that infrastructure for exchanging and hedging in place, you unlock the payment rail functionality of Bitcoin, and then Lightning for retail payments, coffee purchases, streaming on money for streaming on content online. And then over time, of course, the investment case will continue to grow while the payment use will continue to grow. And then eventually you might see the price stabilize as the market deepens. The liquidity becomes deeper and deeper. And as the value stabilizes against goods and services, it can actually take the role as a true reserve currency. because there's no denying that the volatility against anything is too high now for it to be a reserve currency.
True. So time is running away, but I want some kind of final word from you. If we, back in 2009, when Satoshi Nakamoto sent the first transaction, it was pretty obvious. The message was that the business model that we are using today, or banks are using today, and central banks, is not sustainable. It's been kind of getting a reputation of being used by criminals and is a bad kind of money. That has been the narrative so far. What will be the narrative after the Corona crisis, do you think?
I don't know if the Corona crisis necessarily will shift it, but the narrative has improved a lot. And you start seeing normal companies ending up actually using it, normal people using it. In Norway, around 5% of the adult population owns cryptocurrency. 5% of the population does not consider themselves heavy criminals. So I think the image of Bitcoin being something used by criminals is going to go away. And I think you're going to see a spectrum of different services built around Bitcoin. So you will see banks built atop of Bitcoin. Deposit institutions where you get an interest back, where you do not hold your own keys. Centralized platforms like Coinbase becoming very important. But next to that, you'll also see the purely self-custodial, decentralized solutions as well. So it will mirror more the development around the internet that started out as something purely, or not initially, it was a Pentagon project, I guess, but when it really started growing, it was very in the 90s, it was very much about decentralization, freedom of expression. Then you got the Facebooks and the Google and the Amazons of the internet. But next to that, you do have Tor, you have encrypted communication, and you have one infrastructure able to serve both the extremely regulated, extremely surveilled part of this. So you'll see more and more surveillance, both through chain analysis type tools, but also heavier and heavier regulation of exchanges. But you'll also see easier and easier to use solutions that do not involve a centralized third-party provider. So, but you asked me about the narrative. I think it'll only improve. I think those using it for payment will not necessarily even know or think about that's happening in the background. They care about lower fees and they care about it being more efficient. As an asset class, it's definitely maturing, and we see a lot of very traditional family offices and high net worth individuals wanting exposure to it. And especially if Bitcoin continues to perform well in this economic and health crisis, it'll become much more mainstream as an investment object. I mean, one have to remember that year to date, Bitcoin is outperforming both the euro and the British pound. Not to mention, of course, the Norwegian kroner and large stock indexes, but the fact that Bitcoin, even with its massive fall, has outperformed big currencies such as the euro and the pound is not going unnoticed.
That's pretty cool. I see you are pretty bullish on Bitcoin for the future as well.
It's hard not to be in a situation where Bitcoin will have its production of new units now in May, at the same time as central banks all over the world are more or less forced, I would say, to increase to lower interest rates, to increase the money production, to try to dampen the negative consequences of the Corona crisis. So on the one hand, you see more and more fiat being created, if you want to make it very simplistic, and on the other hand, fewer and fewer Bitcoins being created, and well, anybody can do that math.
So that basically means that each unit of Bitcoin in dollar terms should be worth more only by the US and other countries printing money.
Yeah, that's very likely to happen as long as Bitcoin continues to function as it has for a long time and continues to innovate and evolve. And I see no reason why it shouldn't. I think what is so important to realize is that, well, these days a lot of people are discovering exponential growth for the first time. And unfortunately, that's linked to the coronavirus. But Bitcoin's been experiencing an exponential development, or at least a polynomial development, for a decade now. And when you have something that's been able to develop from a 10-page document on an email list for some cryptographer nerds to something that's being taken serious by all of world's government, big companies, and you have had strong networks effects being built up. It's really telling. It's a snowball that's been rolling and building up so much motion now, so it's not going to stop.
That's pretty cool. That's pretty cool words, and exponential growth. That is something we are seeing now, and hopefully in the future as well with Bitcoin.
With Bitcoin, and hopefully not for too long with Corona.
It was great having you on this channel, and I hope we can have another discussion. Finally, where can people find more about you?
They can find me on Twitter. They can find out more information about Arcane and our different companies we've invested in and the companies in our portfolio on arcane.no. I recommend to check out Arcane Research, where we share a lot of what I find interesting market updates. We have a weekly report and newsletter you can subscribe to there and read more on cryptography, I guess.
Perfect.
And if you're Swedish, go sign up on Trio Exchange.
Trio Exchange.
Want to buy your Bitcoins.
Sounds great. I'll make sure the links are in the description below here. So perfect. Thank you so much, Torbjørn.
Thank you.